Well, it's the first major casualty of the European debt crisis. US brokerage firm MF Global has filed for bankruptcy. The company specialises in high-risk contracts for difference, or CFDs. Both its British and Australian arms have also been placed into administration, affecting thousands of investors. Tracy Kirkland reports.
MF Global filed for bankruptcy late last night. The court documents showing $40 billion in assets against $41 billion in debts, putting it among the top 10 US corporate bankruptcies. An 11th-hour deal to sell the company fell through, reports from the US suggesting it collapsed over irregularities in the handling of clients' money. The major cause of bankruptcy, a string of losses from European public debt holdings totalling around $6 billion.
The market moved against them, so they found themselves in difficulty, and that has flowed through to the Australian operations because, of course, Australia is part of the global financial system, and that carries benefits in terms of capital flows and investment, but it also means that when things go wrong offshore, there can be some flow-on effects in Australia.
The effect here has been swift. The Australian Stock Exchange suspended trading of the three affected companies, MF Global UK, MF Global Australia and MF Global Securities Australia. And the Australian arm has been placed into administration.
The Australian Securities Commission suspended all rights of the company to be able to trade on the exchanges and has taken a decision to close out those transactions that are on market. So they're doing that today. The stock exchange is being quite sensible with some of the difficult transactions, and also doing so in the interests of the various clients to try and protect their positions as well.
Deloitte will now work closely with overseas administrators to untangle the complex money trail.
Funds on hand, at least we've got our foot on those. We've frozen bank accounts. We don't have control of clearing accounts. We still may have to approach court for directions to actually get a hold of funds. And of course, we're dealing with offshore jurisdictions and a multitude of practitioners.
The US parent company had been pushing aggressively into the controversial contracts for difference market, and retail investors, including those in Australia, have been landed with margin calls. An Australian client of MF Global has told the ABC that redemptions from his CFD trading account have been frozen, and says he was told by the company client payouts were on hold. CFDs are a concern the Australian securities watchdog has had for some time, even publishing documents for investors on how to trade responsibly.
These sort of collapses clearly don't do the sector any good, and I'm sure the sector would actually agree with that seeing collapses like this clearly doesn't assist trust and confidence from investors.
Comparisons with the Lehman Brothers collapse of 2008 have been played down, but banks here are counting the costs of exposure. Trading in grain futures has also been suspended, as MF Global are one of the biggest participants in the country's agricultural futures market. That's thrown Australia's grain market into limbo.